Good morning and welcome to another edition of Roadhouse Live. We are live. Today is November 29th. It'll be the 29th day of November, which means it is almost December, which means it's always almost January, which means we are,
No, that's a stretch. That's a stretch.
well, just give me some room here. Give me some room here. We could be turning the page on yet another year. 2023 will be gone. We will have 2024. We are there, Bender. We're almost there.
Almost there. Some kind of slippery slope gaslighting thingy. I don't know what that was.
That too.
Yep.
It's slippery. It is a slope.
Mhm.
Speaking of slippery slopes, I think you really have to start looking at some of this inflation data that's coming in and say it's a matter of time before the monkey starts saying, we have a real issue here. We have a serious issue of deflation. It's coming.
And then what happens?
Interest rates gets cut severely based on deflation. And we'll be back to the conversation of universal income. We'll be having all those conversations all over again because the tech and AI bot machines are taking over the world and there's nothing that we can do.
Interesting. Okay.
But in the meantime, we get to do the back and forth, what is it? What round? I'm not even going to try it. Forget it. We're going to scratch that. But the data continues to come in a way that's just like, okay, so this shit's over with. The federales, they're kind of a secondary conversation. They can jawbone and try to keep things kind of capped up, but things for the most part are still wanting to gravitate higher. I think one thing that everybody needs to keep in mind, because I know I've seen it, I've heard it, we're so high, we're so up there, we keep on going up. And the one thing that our markets did not do that a lot of the contemporary markets do, the market of our peers were doing, they were making all-time highs. We've yet to do that. We've yet to do that. They did that months ago. So the idea that we can't continue to melt and push and throttle higher, should be something that is, yes, it can. Just like when we were nosediving into that 3,600 level, yes, we can. Yes, we can. Because the market is constantly trying to price in what is next. What is the next story? So right now, though, if we take a step back in time, we can look at it to where, it's like spending during the summer is going to be horrible. These, Q3 results are going to be absolutely atrocious. Oh, geez, can Apple even sell a phone? Do they even have phones to sell? Do people will they even buy phones? Is Nvidia just a
Hey,
crap?
Hells.
What?
You got to fix your mic.
Am I rubbing on a zipper?
Yeah.
Is that distracting to you for all the wrong reasons?
No, it's not. But anyway, continue.
So that's what we went through. Then again, we get corporate earnings that are, pretty good considering the environment, right? And considering also off certain level of highs. We've also seen pullbacks in several tickers. Nvidia, the juggernaut of all, off of its highs. AMD still well off of its highs. Tesla well off of its highs. Apple doing what Apple does, just being a juggernaut. We're still in a range to where, yes, we can absolutely move higher on the backs of some of these other tickers and stocks. So I think if we're in a healthy market, we have to look at rotation. And if you're taking the initial words that I said, and some of you are going to be like, Hell's is full of shit, so it doesn't matter. The most deflationary element on the planet is technology and growth. Those are the tickers that are going to get the boom. So your Arc K's of the world, maybe it's overextended, needs a little pullback. Those types of companies that are not necessarily within that ETF, but are within that business segment. Those types of things could have the potential to perform really, really well, especially if rates start coming down. Now, here's the other side of it, if you will. You have the dollar. which we've been accustomed to over the last year and a half. For the most part, bad data is good for the market. Bad data, good for the market. These numbers are good for the dollar. And you can see the dollar, that's a pretty decent pop on the dollar this morning off of that data. I think the dollar is going to ultimately be one of those anchors, but not something that can drown us out. If you go back, if you consider it being an election cycle, and you go back and you look to Obama's last year in office, you had the dollar basically busting highs in the market at its highs at the same time. So those two things don't have to run together necessarily being the key word. Now, we also know, Bender, and I think we can say this, we had companies sandbagging guidance. Maybe they're sandbagging. Maybe there's something bigger hanging out there. Either way, looking for a top to short down without there at least being flow in place, in my opinion, is a fool's errand at this point. Doesn't mean we don't get pullbacks. Doesn't mean we don't get red days. Doesn't mean we may not get a couple of red weeks, believe it or not. But we have to look at it through a certain lens until the data changes. And right now, the data, both via flow, the economy, are saying that yes, we can move higher, and most likely we will. The reason why I say that, and I feel so much more strongly about it than maybe I did earlier, was the way the data came in today and the price action over the past several days, how we consolidated, frustrating as all bloody hell. And then they decided to front run this data and they ran it up overnight, and they ran it. It's a pretty good open here. It's like, this is nothing to like put your nose up at. It's a pretty good run overnight and up into the morning and through data, and it's held. So what do we do moving forward, Bender?
We keep trading the charts and we wait.
Correct.
For, if you want to short, yeah, like I agree with you. You either have to wait for some sort of market structure shift or flow or something.
Right.
Because right now this market has no interest in selling, right? We talked about it yesterday. Like any pullback, likely insignificant, not sustained. Right now it's buy. Yeah. Until it's not. And you got to wait until it's not.
Until it's not. And that can come at really, really any point.
Sure.
But it's like, it's within the charts, it's within the noise. Now, in me saying that, that's not saying, well, Hells, I can make money, shorting with the market going up. Yeah, no, I totally agree. Just like you can make money going long. It just depends on your time frame and your set. But I think the idea of buying, puts weeks out until we've, until there's a weakness somewhere within the music. Yeah. I think that's a tough run. There were several opportunities last week and into this week, and ultimately we're higher than what we were. Several opportunities to go ahead and take some scalp, some short, scalp. Yep. You can do that. But right now, this appears to be somewhat of a risk-on environment. And I think you've been talking about Bitcoin. I don't know that there's any more of a risk on than Bitcoin, especially if it's being countered as, in theory, some type of like weirdo hedge that I don't even know what it might be trying to hedge against. I don't even think it knows what it's doing. But that's what we got. So you trade the technicals.
That's what we got. Yep.
You trade the technicals, you trade the flow, and you try your damnedest. And this is the hardest thing for myself and maybe some other people out there. The most difficult thing is putting your emotions and what you feel should happen aside and being an honest broker and looking at what is actually right in front of your face. You can say recession, we're going to die and all that kind of stuff. Yeah, but at what level? At what level are we going to go down? And down,
most likely it's not going to be when everybody is expecting it or wants it.
Mm-hmm. And in addition to that, the last thing I'll say before we push off of these charts, there was, if you go back and you look a year and a half ago at the blood and carnage that was put in the water, there were opportunities to create legitimate wealth. If you were buying Tesla under 100, that ain't bad. If you were buying Nvidia before when it was getting kicked around in the head and neck, right now you're like, dude, this is good. If you didn't, and you were shorting all the way back up, and you're still trying to short, and you're still trying to do all that, you lost on an opportunity for generational wealth in a lot of ways.
And you're kind of doing it wrong.
And you're doing it wrong. Now, these cycles happen every 3 to 5 years. You get these moments.
It used to be every 10 or something, but yeah. Now it seems to have increased in frequency.
Yeah, increased in frequency.
As of late.
Yeah. So what do you do now in this situation? Do you buy Nvidia up against 500 thinking it's going to go to 8? I don't know. I don't know what the answer to that is. I think at this point, if you miss the run, you have to be that much more diligent about what you're doing and looking for actual value. It's one thing to buy Intel at 25 or 28, right? But buying it when it's thinking about pushing 50, it's like, well, well.
Yeah, I mean, look, obviously, we spent a lot of time talking about Intel when it was in the 20s. I've sold some along the way, but yeah, I like what they're doing. I think there's a lot of opportunity with them in the foundries and stuff. But even for me, it'd be hard to buy it.
Yeah.
Now, we were already in, so
we were already in. So with that being said, did I maximize the opportunity? Fuck no. I didn't. I did not maximize the opportunity. I'm not coming out the other side of this going like, dude, I made so much fucking money and I'm just laid in hard and great. Did okay, did better than not. But I have to remind myself that if I chase, or if I do even worse than chase in some environments, if I try to think that I can bring something down, tear something down to get it to where I want it to buy, that's a mistake also. So kind of taking the holiday season and where we are with volume being kind of slowed up and all that, I think it's a good time to reevaluate and to look and to see, what opportunities were missed and what went wrong within your strategy if you were not able to do that. I did that this weekend. And there's some things that I wish that
Can we start?
Yeah.
Can we start getting in? We're going to run out of time. Sorry. It's good. It was good. I appreciate all that. I think it's, good conversation, but I'm trying to be cognizant of time. So let's, Hells, along the same lines of what you were saying, can we just take a moment to talk about if you were listening to this show along the way when we were trading down around 4,100 or 4,120, 4,100 right in here. And when we were down in here, we were talking about, we're waiting for that sort of seasonal indicator of two indices making a new low and one of them refusing to do so. Remember, we talked about that several days in a row, weeks in a row. We were talking about that. So if we just go back and look, did the ES make a new low? Yep, it did, right? Would you say that the NQ made a new low? I would say it did. It took out all these levels. It took out all the price action going all the way back to June. Did the Dow? It did not. It said, no, I refuse. Right? So, and when I'm looking at this, it's like, okay, it did take out, if you're lining up the time frames of what it took out, sure, you can look at this and go, well, it did take out the lows and then some from May. But, looking at the charts, to me, it looks like where these stops would have been, did not get taken. And Q had kind of this double bottom here. Again, we're looking at the daily, and it splashed that. Same thing on the ES. So, when this sort of occurred, we were talking about this. Like, okay, looks like we made a new low over here. Looks like on NQ, they took everything out, all these stops out, and the Dow refused to do so, right? And since then, we're up 500 points. So, that sort of setup and waiting for that and then capitalizing on it, I think plays right into the little conversation or discussion that you just had. So anyway, I wanted to point that out. Also point out that when you're comparing the three here, if I'm looking at this, NQ has broken above its highs from July. Dow has not, and the ES has not yet. Maybe they play catch up, right? You still have this high from July 19th sitting out there on NQ. It's pretty close. But if you look at ES, still has another 100 points or so to go to get there. Whereas the NQ, you're only talking about 100 points, which obviously, NQ moves, in much bigger amounts. So 100 points on the NQ is not 100 points on the ES. But anyway, and the Dow has a ways to go as well to get up there. So just kind of keeping that in view of where we're at. So once these highs get taken, then we need to be aware. And that's kind of where I would start considering, okay, let's see what it does. Do they all play the same game and want to keep going? Or do we get two of them that make new highs, one of them that refuses to do so, and then we get some sort of market structure shift and flow turns sour? Then you could start looking to potentially fill some of this stuff back in on the daily. So zooming in on the ES, looking at the daily here, you can see this channel that we were in. We broke below it, took everybody out. All the longs get stopped out. We reclaimed it. Now we're moving up towards that center line and that old gap. And then if I blow this up a little bit, you can see this volume imbalance in here on the daily. And I would not be surprised to see us, again, pullbacks along the way, sure. But, at this point, what's left? Well, this high back here, 45.9675. And then you got that August high fourth, the gap. Then this volume imbalance. And then we're talking about 4,700, right? 46.85 right here. So, just in the big picture of things on the daily, we're still pushing up, right? Until we get some sort of, like you can see right here, a market structure shift, right? It was moving up, moving up, moving up, moving up. You get these candles down that take out this old stuff, starts making new lows. You get a bounce, right? But your bounce doesn't make a new high, pull back, and this blue line is the 13 EMA. I think I've got that set. So it's like when you talk about buying puts with some time on them, I certainly wouldn't be doing that until, at a minimum, you see that market structure shift or a flow gets turned sour and you're below this, using it as resistance, right? If we just kind of go back to moving averages. So anyway, keep an eye on the bigger picture before you try, really start trying to, you don't want to fight this until it's done. So let's zoom into a 60-minute. Gonna blow this up a little bit. And you can kind of see, this high, this 45.80 half has been taken, and we don't have too much further to go. 45.96.75 before we take out this candle's high. Drill down to a 15-minute. And yesterday, when I came on for a bit, and we were looking at this level, I believe. Let's see where we're on 15-minute. Yeah. Yeah. So we were looking at this level right in here as a potential short opportunity, right? Posted it a couple times, and you got that bounce up into here. I haven't changed this box. I think that was the top of the 5-minute fair value gap. So you got an opportunity to catch a couple points to the downside. Comes back up into that fair value gap, gets a pullback, and then once it breaks above that, look what happens. That becomes support, and then it takes off. So, right now, like we said, the momentum, the direction, the goal is to the upside. I've got this set of standard deviations on here. This is that central bank dealer range. And you can see we came just through 4 deviations, which is 45.89. I'd be looking at this morning, that doesn't mean it won't go further. It's just more often than not, 4 deviations ends up, kind of being the top for the day. And it's already kind of done that. Again, doesn't mean it won't go to 5 or 6. It's just historically, statistically, it does not travel beyond that, or very far beyond that. Early, or setting up kind of the day, a move over 45.90.25, I think sets up the potential to go take out this 45.96.75. And you get that close, and it's like, okay, might as well just take 4,600. I don't know that it'll get that far today, but 4,600 is now in reach, right? I think it's tricky, looking at the 15-minute, kind of everything's been filled in and hasn't left a whole lot behind, but you can kind of see where the stops might be sitting. And this area right in here stands out, right? 45.60, or sorry, 45.76 half. That's less than 10 handles down from here. So if they, decide, especially early, first thing in the, open within the first half hour or so, if they come take this and it wicks that level and then pulls back up and leaves a fair value gap behind, I would look at that as a potential entry long, because this would be an area where the stops are sitting, right? Maybe it trades down into this 15-minute fair value gap right in here. That's 4 a.m. Let's see, where's 3 o'clock? And 3 a.m. kind of right in here. And this is kind of, the other area where it's like, okay, that didn't take those out. So if you get continuation, right, on the flip side, if it breaks this right here and leaves a fair, you get that big down candle with a fair value gap left behind that it trades up into, okay, well, now you can look to potentially take that short. It would be difficult because you're like, okay, and this is where you can get hurt, is it's like, okay, well, it took out all that 6 a.m. price action, took out stops. So again, you kind of have to be patient and look for the reaction that you get in here in this area. And if you're trying to short after taking that, you have to play it tight. You have to wait for that pullback into a fair value gap and play that very tight. I think that's about all I got. Yeah. Short on time. That's about all I got. So pass the mic.
All right. Thanks, Bender.
Yes, sir.
All right. Morning, everyone. Make this quick. So PSX, there was about 5% in pre-market. News is Elliott management has taken up $1 billion stake, and they're looking for 2 board seats. Nice move on it. Other big news was Apple is looking to end its credit card partnership with Goldman Sachs. So on the 20th, Goldman Sachs had a pretty big dark pool that had come in. I'll post it in the room. I think it was 339 something. It wicked to it, currently hovering below it now.
Sonny,
GM
who ending it with who?
with GS.
Right, but
Because
is GS backing out or is Apple moving
Apple's
on?
backing out. I think Apple has
Okay,
enough
it was
cash and everything.
yeah, I was reading and I was just like, okay, so it was interesting because I guess Goldman lost like $1 billion on the deal somehow.
Yeah, because the thing was because Goldman was offering a higher savings interest through Apple versus their own savings
Got it.
account that they had created for their people.
Got it.
And I think Apple has enough cash sitting around to, finance their own buy now, pay later. And if you don't pay, we
Absolutely.
disable your phone. Gives them the full control. GM had their ER, so they're reinstating their 2023 guidance. They also announced a $10 billion buyback and announced a higher dividend. They are still pausing their investment into Cruise, their automated driving thing that they were testing, or actually it was in production in Phoenix and San Francisco. Baba faces challenges with the U.S. chip export control, and they're also abandoning their cloud spinoff. A few months ago, they had announced that Baba was going to split into 6 different companies, and the cloud spinoff was one of the bigger ones. So Baba, I think, is the 4th largest cloud provider. So this kind of affects them. There's been a lot of news around them. The Jack Ma family selling some of their stake, things like that, spinoffs and all that. So they've been trying to either they're trying to hold it down for now before push it up, but there's been a lot of news about coming around Baba. The German inflation sank more. DAX jumps to a 4-month high, and they were talking about, hey, the ECB rate cut may come sooner, and kind of ties in what we've been hearing. Hey, the Fed may cut rates sooner than later. Energy costs retreated in Europe, so that was one of the big things that eased the inflation up there. VVOS, this one has made a nice, massive move this morning. It's a healthcare drug company. They got the FDA approval for oral device treatment of severe sleep apnea. So it has made a nice move. I'll look to scalp it if I get a chance on that. And yeah, that's about it.
All right, let's go. Chart time. Good stuff. I got a couple things we'll go through quick. We've got 10 minutes till the open. So let's see, I'll do some sharing. All right, so real quick, we came into this week, noted the possible weekly smash burger that was a setup to the downside. And if we zoom in here, that already would have, it never hit, and it already would have stopped out because we broke that last week's high. So take that off. And then I was kind of looking here at the daily. So again, smash day is a failed breakout. So looking for a close outside the prior day's range, and then you would take the trade in the opposite direction. So we really haven't had, it was, we had this potentially would have been a smash day to the downside because we closed the prior day's high, and now we're running back up into this high. So it would have been, cutting that short if he had taken it over there from Mr. Larry Williams. So that's kind of what we got going on over there. If we jump over to the NASDAQ, interesting, notable that we have not taken this bear's break even stop up here. So we popped the flag. We've got this 4-hour fair value gap, which also very similarly lines up with what Bender showed us on the ES. If you zoom into a 15-minute, we've left this gap in here, so just we would have to kind of go into the 4-hour fair value gap and just a little bit lower. So that was kind of what Bender was showing us there, similar on the ES. So we'll see what we get over here on the NASDAQ. The Russell. So the Russell pre-market popped this level I've been waiting on. We've talked about this key level here all week. It was looking for this to potentially be a failed breakout, stop out there and push back down, which we have now done. So now it's almost kind of looking like a longer term bear flag over here on the Russell. We'll see what we get, considering everything else had a bullish reaction this morning. So we've got a box here below the torture box. So I'll be looking, if we get back down here to this 1808.3 area, we'll see if we get any support in through there. This is kind of what I'll be looking for. It is notable here that they just took this level and sold it right back down on the Russell. So we'll see what we get, potentially working on a bear flag. We got alerted in the room here. I've been waiting on the setup on Rivian. Let's check this out. So this was the key level here that the alert popped on, 17.2. We'll see if we can get any momentum out of this. Fibs are drawn off this daily range. Let's see, and you can see that bull kind of started to step in right down here at the 786 retracement. And then next up would be their 618 retracement for bull. So I'm going to have one eye over there on Rivian. I like it for, potential continuation to the upside breaking. This was multiple inside weeks that have now broken to the upside here. This was an inside bar. This was an inside bar. And now we've finally broken this range. So going to keep one eye on there, looking for long entries on Rivian.
The other one is not bad at all on Rivian. There's just enough to give it that push up.
Nice, yeah. And it's taken a hit from what was it? I think here was the offering, and then here was the ending a partnership with Amazon. But it's been pretty resilient considering it. Just found the 786 retracement. And the other one would be Netflix. Netflix was set up here in this hourly bull flag. It had a daily inside bar, and it appears to be trying to pop this bull flag here. So I'm going to see if we can get above 481.75 and hold. But I mean, this is just a killer uptrend here on Netflix. So be looking for continuation. Excuse me. And other than that, I'll be looking at Apple. Call some levels in the room on that one, and we'll see. I'll be also, as usual, looking at commodities and the dollar. So I'll call that stuff out in the room. And I think that's it for today.
All right, thank you, fellas. Very, very good job. I think we're going to have to keep our eyes pretty peeled on the dollar and also the VIX. The way it continues to get crushed, there's a point of diminishing returns on that push down to where you'll start getting people coming back in to hedge these longs with the VIX. That could be a little bit complicated if you pair that with the dollar, trying to find where its home needs to be, which I still believe that's another 250 down in this zone. But how we get there is a different question altogether. So always keep an eye on those things for the setups, specifically on a 15-minute if you're intraday trading, just to see what those guys are trying to do, what they're trying to form out. Because when we do start getting covering on the dollar, when the dollar starts moving higher, because it is being shorted at this point, or if you see a bearish setup in gold, it's something to really, really keep in mind as you're entering and exiting trades and looking for opportunity. That's all I got. You guys have anything else?
Nope.
Good.
Nope. Very good. Good show, guys. 5 minutes still open. Let's have a good day.
All right. See you soon.